name is Dalila Sumayang binti Muhammad Arsyad and my matric number 301134. So now I will present about the first company, which is IHH Healthcare Berhad. This company is the produce product healthcare, and it is also listed in a public multinational. IHH Healthcare, known as the largest private for-profit healthcare. Not only that, they also have a network of 18 hospitals in 10 countries. Next, we move to a cycle growth company. They have a consistent patient demand and strategic pricing investments in their company. They also increase spending on healthcare service so that can give convenience to their patient. IHH Healthcare also make a new hospitals opening in Malaysia, India, Turkey, Europe, and also in Hong Kong. So from that, they have all branch in all countries. So they add a service just as a laboratory testing and primary care clinic. However, based on SWOT analysis, IHH Healthcare have stood on strong competitive position in healthcare industry. For witness, this company is low on skilled medical professional. On opportunities, IHH Healthcare grows in medical tourism because that can provide a stable income. Lastly, for threats, this company have slow in technologies changes and cybersecurity risk post-challenges. So next, we move to fundamental analysis and technical analysis. For fundamental analysis, have 4 ratio, which is liquidity ratio, show the amount current ratio and quick ratio in 2022 is higher than 2023 and 2024. Second ratio is profitability ratio. Based on graph on 2023 is higher than 2022 and 2024. This shows that company efficiently use their equity and assets. For third ratio is leverage ratio. According to this graph, IHH Healthcare have efficient management in debt for equity and assets. Lastly, ratio is efficiency ratio, show that company inefficient use of assets and can not generate higher sales revenue, but they can collect receivable account with efficiency. So we move to technical analysis. Have 4 techniques: support and resistance, MACD, moving average, and relative strength index. From 4 techniques, in summary, this company is suitable use support and resistance because have clear framework in determine the price movement faster in company. Last but not least, I will tell about the portfolio trading for 11 days, which is 10 December until 24 December. In summary, we is not as a risk taker. However, we have get gain 15.2 and we get more gain on 12 December because we buy at a price share lower than sell in higher price.
Hi, my name is Amna Najwa binti Kamar Zaman. My matrix number is 301136. So, Time.com Berhad is a Malaysia-based telecommunication and digital infrastructure company listed on Bursa Malaysia with its headquarters in Kuala Lumpur. The company plays a key role in supporting Malaysia's digital economy. Time.com focus on data-centric services rather than mobile telecommunication. It provides high-speed fiber broadband, domestic and international data connectivity, also support retail, enterprise, and wholesale customers. Its core products and services include fiber broadband, local and international data connectivity, data center, cloud, and managed services, all supported by carrier-neutral infrastructure. The company operates a fully fibrous nationwide network, strengthened the cross-peninsular cable system, and invests in international submarine cable system. This enables Time.com to deliver reliable, secure, and scalable connectivity across Malaysia and beyond. Now moving on to the industry analysis for Time.com. The telecommunication industry is currently in maturity growth phase. Despite intense market competition, Time has shown great resilience with a 6.2 revenue growth. Their key strategy here is diversifying beyond traditional broadband by investing heavily in high-value digital infrastructure, specifically through their aims data centers. Looking at the SWOT analysis, our primary strength lies in our premium fiber network and a very solid financial foundation. However, a notable weakness is our limited network footprints, which is mostly concentrated in high-rise urban areas and the lack of mobile fixed convergence. The biggest opportunity for Time is the rapid shift toward cloud services and enterprise digitalization. To stay ahead, we must manage threats such as aggressive pricing from larger competitors, and the high capital cost required to maintain our technological edge. Next, financial condition and results. Moving to Time.com's financial health, the company is in a very strong liquidity position with a current ratio between 3.22 and 3.81, which is well above the standard of 2.0. In terms of profitability, we saw a massive spike in 2023 due to one-off gains, but the net profit margin has now normalized to a healthy 23% as of 2034. Finally, our leverage is very low with a debt-to-equity ratio of only 0.27 to 0.34, meaning company is low risk and primarily funded. Valuation and intrinsic value. For the valuation, Time.com shows steady growth with an average sales increase of 10%. Based on average price-earning ratio of 12.46, we projected the company's future performance. We expect the earnings per share to rise 62 cents by 2026. This is give us an intrinsic value of 7.68 cents per share for 2026. This indicates a very high potential for share price appreciation, making it and attractive. Moving on to the technical analysis of Time.com Berhad. Based on the MACD indicator, the stock experienced alternating bullish and bearish momentum throughout the year. A recent bullish crossover in December signaled a breakout, although the weakening histogram suggests possible short-term consolidation. The RSI remained mostly between 40 and 60, indicating a consolidation phase. However, the sharp rise above 70 in early December confirms strong buying momentum, and the RSI staying above 50 suggests buyers are still in control. Looking at the moving average, the share price broke above the 9-day SMA in December and has remained above it, indicating a positive short-term trend with the SMA acting as then dynamic support. Lastly, support and resistance analysis show a key resistance at around 5 ringgit 61 cents and support near 4 ringgit 73 cents. The price holding above previous resistance levels suggests a potential trend reversal to the upside. For this part, discuss the portfolio trading activities for Time.com Berhad. The portfolio reflects on active short-term trading strategy, where shares were frequently bought and sold within a narrow price range to take advantage of small price movement. Most transactions were executed at similar price levels, which helped to minimize exposure to large price fluctuation. Overall, the trading activities generated a small but positive net gain of 32 ringgit, indicating controlled execution rather than aggressive speculation. This strategy highlights a cautious risk management approach, focusing on capital preservation while achieving incremental gains through disciplined timing.
My name is Nurushina binti Yusri. My metric number is 301037. I will present the company that I have been selected, that is 99 Speedmart Retail Holding. 99 Speedmart Retail Holding Berhad is a Malaysian mini supermarket operator listed on the main market of Bursa Malaysia. Operating under the 99 Speedmart brands, the company runs thousands of small format stores nationwide, mainly in resident areas established in 1987. It has grown from a single sundry shop into a leading grocery retailer. Its business model focuses on cost leadership, efficient supply chain management, and the high inventory turn to provide everyday essentials at affordable price. Speedmart Retail Holding Berhad is in a rapid expansion stage of the retail growth cycle. From a single store in Klang in 1987, it has become Malaysia's largest homegrown mini market chain with over 3,000 outlets by 2025. Strong logistics, high transaction volumes, and nearly 10 billion ringgit in 2024 revenue demonstrate its scalability and the market reach. As the convenience store sector matures, 99 Speedmart has entered a leadership and a consolidation phase, leveraging economies of scale and efficient supply chains while investing in distribution centers and the e-commerce post-Bursa listing. Strengths include wide outlet coverage, value pricing, and the brand loyalty, while limited product variety and dependence on physical store are the weakness. Opportunity exists in digital retail and regional expansion with competition and rising costs as a key. Fundamental analysis of 99 Speedmart Retail Holdings show financial improvement from 2022 to 2024. Liquidity strengthened with a current ratio of 1.74. Note that the company remained inventory dependent. Profitability grew steadily with revenue and the net profit rising and net profit margin reaching 5% in 2024, reflecting the better cost control. ROA stayed stable while the ROE normalized post-listing. Leverage rates decline as the debt ratio fell, indicating a healthier capital structure. Efficiency improved in receivable management, supporting cash flow despite lower asset turnover from expansion. Rising EPS, stable profitability, and moderate intrinsic value growth indicate financial stability and sustainable long-term investment potential. Indicators show 99 Speedmart Retail Holding Berhad in a strong bullish trend. The MACD shift from bearish to bullish around April to May and have remained above the signal and zero line, though momentum have slightly moderated. The RSI have risen from near oversold to above 70. It's indicating that strong buying pressure but potential short-term consolidation. Price have stayed above the rising 9-day moving average, confirming short-term supports. Supports and resistance levels show higher height and lows, with a key support at 3.01 and resistance near 3.80. It's reflecting a positive yet cautious bullish outlook. From 10 to 24 December, 99 Speedmart Retail Holding trading portfolio followed a cautious short-term strategy. Small share purchase capitalized on minor price fluctuation, with price stable between RM3.52 and RM3.55. By buying low and selling during slight upward movement, the portfolio earned a net profit of RM42. While modest, this shows disciplined short-term trading in stable stock can deliver consistent returns.
Assalamualaikum and hi, my name is Nurul binti Rosli and my matric number is 301094. So I will continue with Sime Darby Property Berhad. Sime Darby Property Berhad is a Malaysian real estate company under the Sime Darby Group, listed since 2017 with over 50 years of experience. The company developed integrated township including residential, commercial and industrial properties and manage the full property development process from land development to asset management. It operates mainly in Malaysia with some international presence. Sime Darby Property focus on sustainable development and integrated township, planning to meet market needs backed by a large strategically located land bank and making it one of Malaysia's major property developers. So I will continue with growth cycle for Sime Darby Property Berhad. So Sime Darby Property is currently in a strong growth phase. In 2024, the company recorded over 4.1 billion in sales, a 24% increase, driven by residential, industrial and commercial projects. It is also moving beyond residential development into industrial projects, data center and other recurring income assets. Around 30 to 50 of its quarterly sales now come from industrial products, while data center provides stable long-term income. So going forward, the company is focused on sustainability and long-term growth. Sukuk issuance help fund new projects and support earning stability, so it allows Sime Darby Property to stay resilient and competitive in the market. So next, I will continue with SWOT analysis. Sime Darby Property has a strong brand, over 50 years of experience, a diversified portfolio and award-winning development. Its weaknesses include limited customer-focused service, cost management challenge and employee turnover. Opportunities exist in growing industrial real estate, recurring income models like data centers and eco-friendly developments. However, the company faces threat from strong competitors, potential oversupply, fluctuating interest rate and economic uncertainty that could affect buyer demand and margins. The next one is fundamental analysis. The first one is Sime Darby Property liquidity has weakened in 2024 with lower current and quick ratio, showing higher short-term pressure and the need for careful cash flow management. The second one is profitability ratio. Sime Darby Property profitability is rising, with net profit up from 311.7 million in 2022 to 570.6 million in 2024. Stable 12% margins and improved ROA and ROE, reflecting greater efficiency and strong performance. The third one is leverage ratio. Sime Darby Property leverage is stable, with debt under a third of asset, keeping financial risk management and supporting future growth without heavy reliance on its efficiency ratio. Sime Darby Property efficiency has improved, with asset turnover rising from 0.18 to 0.26 and receivable turnover from 3.18 to 6.46, showing better use of asset, faster collection and stronger overall performance. The last one is market ratio. Sime Darby Property EPS have steadily grown from 5 cents in 2022 to 8 cents in 2024, showing strong stability and rising shareholder returns. Next is equity valuation. Sime Darby Property has steady growth, 24% sales increase, EPS up from 5 to 8 cents, dividend rising to 39% and a fair PE of 34.94, balancing growth and shareholder returns. The next one is intrinsic value. Sime Darby Property is expected to keep growing, with sales rising to 6.56 million and net profit to 648 million by 2026. EPS will reach 10 cents, share price around 3.33 and dividend stay at 3 cents, making it attractive for long. I will discuss the technical analysis. The first one is MACD. Sime Darby Property MACD show mostly weak to neutral momentum, with brief bullish signal mid-year. Recently it hovered near zero, indicating consolidation and slightly bearish momentum. The second one is RSI. Sime Darby Property RSI is around 52, showing neutral to slightly bullish momentum. The stock is stabilizing with potential upside if RSI moves toward 55 1.216. The third one is moving average. Sime Darby Property is trading around 1.39 near its short-term moving average, indicate consolidation. After rebounding from 1.30, there's some short-term recovery, but the flat moving average show a sideways trend, a weak buying interest. The last one is support and resistance. Sime Darby is trading around 1.39 between support at 1.27 and a resistance at 1.48. The stock is consolidating with a breakup above 1.48 bullish and below 1.27 bearish. The trading portfolio for Sime Darby Property Berhad show discipline buying and selling from 10 to 24 December, using 100 share per transaction to profit from small price movement. For example, on 11 December, selling at 1.95 per share and earn RM 115 ringgit profit from a purchase price of 80 cents. Subsequent sales between 16 and 24 December capture smaller profit of RM 3 ringgit to RM 5 ringgit per trade. By selling during short-term price increases, the portfolio realized a total profit of RM 185 ringgit.
Next, we move on to the last company, which is Pohkong Berhad. Before that, let me introduce myself. My name is Putri Bagis Hananim with matric number 301072. So, let's start with Pohkong background. Pohkong is established in manufacturing jewellery and jewellery-related product, also known as Malaysia's biggest jewellery retail chain, in about 91 to 100 outlets in Malaysia. That's amazing. Next, Pohkong has a vertical integrated business structure with its own manufacturing facility, allowing the company to exercise quality control, efficiency, and product differentiation. You know, every company must have SWOT analysis. So, let's find out what is SWOT analysis for Pohkong company. First, for strength, it will build a strong brand and good reputation with 91 outlets nationwide, which can be accessible and market present. Next, for weakness of Pohkong, it's easy to imitate means competitor can replicate the offering product and retail approaches. Last but not least, opportunity that company have is increasing consumer trend toward customized, meaningful jewelry and rising demand. And for the last analysis, which is threat, many local brand and international brand vying for market share, which lead to price sensitivity and marketing pressure. Otherwise, for the growth cycle that have three phases, which is mature growth stage, market growth phase, and grow with a liquidity ratio shows that current asset increase faster than current liabilities, indicated that the company ability to meet short-term obligation has improved over time. Next, profitability ratio show a steady increase in net profit margin, and return on equity. That means the company is becoming more efficient and it's generating better returns for shareholder, especially in 2024. Lastly, leverage ratio indicating that while total asset and equity continue to grow, liabilities remain well controlled. Debt levels are stable, suggesting low financial risk and good solvency. Overall, Pohkong Berhad demonstrates improving liquidity, stronger profitability, and healthy leverage, reflecting good financial performance and sustainability. The efficiency ratio shows that revenue increased steadily over the 3 years, while total asset also grew. This indicates that the company is using its asset more effectively to generate sales. Receivable turnover remains stable, suggesting good credit management and timely collection from customer. Next, the market ratio shows that earnings per share improved alongside rising net profit, while the number of outstanding shares remains relatively stable. That means profit growth benefits shareholder directly. This slide provides a technical analysis of Pohkong Berhad, utilizing 4 key financial indicators to evaluate price momentum, trend, and potential entry point. First picture, which is MACD, moving average converges and diverges. The MACD chart at the top of left focuses on the momentum and trend direction. This indicates bullish momentum. The histogram bar are increasing in height, suggesting that the upward trend is gaining strength. Second picture is relative strength index. Relative strength index chart at the top right measure the speed and change of price movement. The RSI value is hovering around the 65.8 point and above 50 is generally bullish, while it is approaching the overbought threshold of 70. Next, for moving average, which display a simple moving average overlaid on the price action. When the price stays above the moving average, is confirmed a prevailing uptrend. The moving average acts as a dynamic support level as long as the price remains above and the outlook remains positive. Lastly, support and resistance. The final chart of the bottom right identifies key price floor and the ceiling. The stock is currently testing a higher range. A breakout above the previous high of 1.3 would be a strong buy signal, while a drop below 1.13 might indicate a trend reversal. For the summary of company Pohkong Berhad, the trending portfolio of Pohkong from 10 to 24 December shows a disciplined short-term trending strategy using 100 shares per transaction. Each buy was followed by a quick sell to capture small price movement. Profit were modest but consistent, such as RM2 on 12 December, RM2 on 16 December, and RM4 on 22 December as the price increased slightly. Although some trend broke even, the strategy minimized risk while taking advantage of small price differential. Overall, the portfolio generated a total profit of RM7, demonstrating a systematic and controlled trend.
Monetary fiscal about OPR lending rates will be influenced. That means change a rate can give a depositor experience with investment activities, and fiscal policy is about the Malaysian government, and fiscal policy have two types, which is expansionary policies and contractionary policies. Expansionary policies about spending more money for construction development, and contractionary policies about when macroeconomic strategy to slow down and make economy in dangerous level.
For other economic factors, we focus on specifically, first, Malaysia's inflation rate. Based on the graph, Malaysia experienced relatively low and stable inflation throughout the review period, ranging from approximately 1.1% to 1.8%. Inflation was slightly higher at the beginning before declining to its lowest point during the mid-period. In the later months, inflation showed a gradual and controlled increase to around 1.4 to 1.5%. This indicates that inflationary pressures were well managed and did not pose major risks to economic stability. Overall, the stable inflation environment benefit households by preserving purchasing power, while businesses enjoy predictable costs, creating a supportive environment for economic growth and investment.
This graph shows Malaysia GDP in USD billions over the chosen year. Overall, we can see a steady upward trend reflecting consistent economic growth. There was a noticeable dip of the 2020 due to the global COVID-19 pandemic, highlighting Malaysia's exposure to international economic shocks. However, in the year following, GDP recovered strongly, surpassing pre-pandemic level. The recent peaks demonstrate economic normalization, high investor confidence, and the country's ability to withstand shock while maintaining long-term growth momentum.
Next, I will move to unemployment rate. Malaysia unemployment rate declined from 3.2% to 3.1% and stabilized at 3% after March, showing the labour market is absorbed new entrant post-pandemic. This support higher household income, stronger consumer confidence, and steady business activity, indicating policymakers don't need strict labour measures.
The recovery of consumer spending in Malaysia from 2023 through 2025. Initial 2023 saw conservative spending level due to economic caution. However, moving into 2024, we see a steady upward trend despite quarterly fluctuation caused by inflation and shifting interest rate. By the end of 2025, surge reflect higher consumer confidence and strong employment condition. Similarly, a robust economic recovery and a healthy outlook for Malaysian domestic